Just one time?
Just one time.
So you saw what's hot in fintech, but Tomasz, I have a question for you to begin with. At the end of every day, every week, every month, what do you want to do as a human being?
Have a decent nap, actually.
Have a decent nap after a day, week, or a month of honest work. So what you want to do is you want to get paid. All of us want to get paid. And this is what we're going to discuss today exactly, because fintech is nothing else but making sure that you're getting paid. It's just about the method. Is it peer-to-peer? Is it open banking? Is it something like Plaid? Is it crypto? These are the news that we're going to discuss today. So, Tomasz, let me frame the discussion, and then I'll be very curious to hear any comments and remarks on your side, because we've always had this debacle between the incumbents, the old usual banks, the institutions, and the new ones, the Gen Z, the millennial startups, the neobanks.
Yeah, absolutely. So, let's do this.
We were battling with this vision that they don't like each other. But just recently, we saw JP Morgan's Jamie Dimon on CNBC confirm that if you want to win any significant market, you have to play with fintech companies. You have to play in that playground, because the institutions are stuck with regulations that the neobanks and any other neo insurtechs or any companies of that sort just don't have that problem. Do you think it's just beautiful talking for the press, or do you think he's being serious here?
It's like the thing, huge relief, I would say, huge relief. Sorry for being sarcastic a bit, but what actually, to rephrase what Jamie Dimon says, I believe is like the fintech is here to stay. However, if you just follow him for like the 10 years back, he's obviously leading one of the most influential company in the financial world, like JP Morgan. But what we see is actually he's also known for making the bold statements, like the 10 years ago or so. And I've seen a great tweet by Chris Skinner today. He said that Bitcoin is dead. For sure, it's dead. Right now, what we see is like actually JP Morgan is into cryptocurrency ecosystem, is going like a deep dive into the system. So I would say it's good that the fintech is being acknowledged. We see that the reality is changing, so it's no longer it's like David against Goliath. Is more about collaboration and how to actually bring more value to the market. Obviously, we'll see some competitive forces between banks and fintechs, but it's just it's a good start. That for the figure so high on the financial world saying something like this.
That's an interesting point. I didn't know about all those statements from the past 10 years. So thank you for filling in the gaps that I had in my knowledge. So since we have 30 minutes and we're already 5 in, let's jump right into the other topics. We've got Plaid and the recent investment that values them at all so much. What do you think about open banking as a whole? Because the problem is with, if you're interacting not as a business with the bank, but there's an intermediary, they always want to make money as well. It's Visa, MasterCard, whoever is in the middle, they need to take their cut. And with those fees rising and businesses perhaps not having as much financial volume as they could, it's reasonable for such companies to take place, right?
Yeah, so to make it short, I will just have 2 remarks on that. So first, for Plaid, it's actually a really nice turnout of events after the recently aborted almost $6 billion Visa deal that was blocked by the US Justice Department. But it's actually nice to see that the Plaid has raised the $500 million after a failed merger for a valuation that is like the $13 billion US. And regarding the open banking as self, what I see is that the open banking is more the impact of the open banking is also visible in other industry. For example, if you take the recent shift from producers like Nike, for example, so they are moving to direct to consumer shift, so cutting some smaller middlemans like retail chains, smaller retail chains, or even the medium ones like Macy's. What I think is that the open banking enable everyone to, have the different sets from the payments or banking industry and implement them on their side, and don't really care about anyone in between. So it really enables not only innovation in the banking system, but also innovation in the broader landscape. It's really enabling the innovation in the other industries as well.
Yeah, I see what you're saying. Essentially, if you lower the technological barrier of entry, it's not that just more people go to the bank, it's also that more people take out the banking value outside of it. So the more the merrier. And actually, I really like the fact with Plaid that they first were going for a specific offer, then they got evaluated in that offer, the offer got rejected, and then they actually got funding because the previous merger offer was like a validation of their value. So that was, even though it's probably just because of the block that you mentioned, it's also very nice for a startup to go through such a story. So just like you mentioned, that's a very nice segue. In 2020, Angela Strange from Andreessen Horowitz released an article on a YouTube video. I recommend everybody watches it. She states that every company is going to be a fintech company, exactly for the reason that you mentioned. So for the fact that it will not be difficult for me as a startup company that has to do with events, for example, to all of a sudden implement a payment element, just like we've seen Signal, Clubhouse, and even WhatsApp is testing that in Brazil, peer-to-peer, but still everybody's in on payments. So do you see a future in which we won't know any fintech companies because all of them will be merged in the background of the apps that we know?
We'll know the apps for sure, but so maybe we'll have like some kind of 1, 2, 3, 5 super apps, so to speak, that we will know about. But obviously, what we see right now, even if you pay after having a Uber ride, do you actually see the movement of any money? No, you just get a notification. It's done.
Yeah,
it's done, and I think that's the future will look like. Actually, what we don't see is that the COVID has stopped some new implementations, like you're not sure anymore should you invest in the QR mobile bank payments, because you don't see how there will be like the movement of people also, and the payment flows, but it's not that easy to right now. Like before COVID, everyone was talking about wearables, like we'll be paying but through wearables on something like that. Right now it's like, should you invest in open banking modules? Should you invest in wearables? Should you invest in crypto or any other kind of stuff? So it's hard to tell right now. But I think that people eventually will stop caring about their banking applications. They will think about the value they have, that the providers are giving them back. That would be my shortest answer to that.
Yeah. First of all, you mentioned super apps, so shout out to our friend Fardad from Kareem. We just spoke about this a couple weeks ago, right? And also, what I'm seeing, I think you mentioned this before, and we're going to dive into this even more with crypto, is that not only are we lowering the barrier of entry, not just technological, also when it comes to just tech itself on the consumer-facing level, but also the interest is rising. People are being much more mature, and even though sometimes it's events like the GameStop fiasco causing that spike of interest, if people get educated for the wrong reasons, but they still get educated, hey, I'm not complaining, right? So that's what I wanted to mention. There's a startup called Grow, W in India. It's a unicorn following that recent investment. And essentially what it shows me, Grow does what Robinhood does or what Revolut Investing does. It simply allows you to play around from your phone with the stock markets. And we can see that sort of universally growing around the globe, this hunger for having access to tools that even if you are not financially smart, after some time of simply using that tool, you're bound to be smarter by definition, even if you make stupid choices.
I do hope so. You presented a very optimistic view of the future. I do hope you're right. I also, it's always a great debate, and I don't have a clear answer to that. Like about the friction that should you actually, how far should you be educating the user, the end user, about the consequences of choices, and how, well, not to be the judgmental of their choices in the same way. So do you have any responsibilities as a financial provider to educate the users, or actually try to, you know, allow them to do anything they want with their money? And just, you know, if it's within the any regulations and law boundaries, maybe it's okay to do. But I think that brands and companies will need to start think about building trust also. So I would say, yes, I do hope people will get smarter, but I also do hope that the companies will have more accountability or responsibility about how they want to educate and their consumers, their end users, over the consequences of their choices. I'm not sure it really answers the question, but I just wanted, you know, sideways into some other.
That's a good one, because actually it stands to reason that if the more magically looking and beautifully efficient the solution is supposed to be on your screen as the end user, the higher the complexity has to be on the backstage, which you don't see. Because if it's supposed to make several things that you would do separately streamlined into one activity, then someone has to make sure on the back end, on the backstage of the whole operation, that actually those things work and talk together through APIs or anything else. So I completely agree with you, especially that with this growing complexity, we simply cannot expect the users to follow understanding or education of that complexity. So speaking of people getting smarter or not, let's discuss. There's Zilch from the buy now, pay later trend. And Zilch brings buy now, pay later to the UK's high street because they're slightly reversing it. They conduct soft background credit checks. So you can, for example, have a card that is issued by Zilch, which allows you to make buy now, pay later. So it's going kind of Inception-like, because you first had credit cards, then you have buy now, pay later, and now you have a card that allows you to work on a buy now, pay later scheme, but it's not a credit card, right? So actually on our Disruption Forum Fintech on the 13th of April, so 5 days, really close, we're going to be having a panel with speakers, right, Tomasz?
I think it's right, but let me do a quick break to say hello to Kieran. Thanks for joining us here today. Maybe we can already drop some link to the event page to show what we are talking about, because we are really discussing the fintech right now, because in like 3 business days and the next Tuesday, we have the really cool fintech event with the 15 different speakers from West Coast, East Coast, Germany, UK, France also. So you can sign up for the event. The link is down in the comments already. Coming back to your question, I think the buy now, pay later solutions, we see a great pick, and I'd say this industry is booming. Quoting some kind of Tarantino movie. Hi, Rafał. Yeah, finally we are to. It's not the first time I think we are on the same screen, but maybe it is. Coming back to the buy now, pay later is also the kind of a follow-up to what I've said about education. It's like, you know, the new ways of lending, new ways of providing the money to and consumers, even if they don't have the money. So what we see right now, we have Zilch, of course. It's like the company that has already secured the license from some kind of financial regularity in the UK. It's not always the case. I will not drop any names right now, but we have some players that go, I would say, more within the more gray area in that space, so not follow these regulations so closely. but I think, what was the question again? Sorry.
Probably something as generic as what do you think? I'm still just kind of confused about what is it that it's different about this. I have nothing but love for the team at Zilch, but I'm trying to wrap my head around this. How is this different from a credit card? Because we're talking about a product that's merchant agnostic, because usually you would have to have the store at which you're buying offer you the buy now, pay later thing. Whilst here, you have a card that has the buy now, pay later functionality. So that's sort of the question I'm asking. Do you see this any differently, or?
Yes, what I see is that we have some kind of maybe not that great connotation around credit cards. So they are actually, we had some not that great headlines around credit cards, how it's that very easy to be addicted to spending, then you have really no control over how much do you spend for your credit card. And buy now pay later is really very similar thing under different name. But this is what we see happening, like the old solution rebranded, reinvented. It has some differences in terms of how it's being implemented, but it's similar to some extent. Hi Tatiana, hi Rafał, also second Rafał.
I wanted to do just that.
Sorry. Next 3 are yours.
Yeah, looking forward. So coming back to this open banking case that we discussed a moment ago, let's expand on that a little, because I am curious to hear your opinion. If open banking works, why would the merchants remain in any other space other than the physical cards, which already, as we know, are disappearing and going into our phones and watches and everything like that? That's what I'm thinking, because of course, contactless transactions due to COVID up 300%. But that's contactless. That's you being physically at the store. We know that a lot of those transactions aren't happening physically, they're happening online. So in such case, why do I use anything else than open banking?
Now you kill me with that question.
Exactly. I don't know.
I know. Well, actually, for the merchant, the truth is that the merchant needs to use any kind of terminals or whatever ways of paying that their end users are using, basically. So the consumers. So he needs to adapt, being flexible around the payments options. But I have never been a merchant myself, so we should invite someone over. Maybe we have someone in the audience, but I don't think so. But maybe if we have any person with the merchant experience, like the personal merchant experience, let us know in the comments. Maybe we have some. I don't have a good answer to that. It's kind of like legacy. Sometimes it's like we need some time to adjust, and people need some time to adjust to understand what's going on, how they should. The COVID actually accelerated some trends, but also I think for some merchants, they are not operating, so they are not taking any moves right now. They are thinking about surviving, not about adapting to new tech.
True. And what I also read up is that it's the matter of sharing the details directly with the business. So perhaps that could be a concern, or like a depositioning. If I'm Visa, if I'm MasterCard, my comment towards open banking is we handle your data and privacy like we have for the past tens of years safely. Whilst here, you're sharing your details directly with the business. If you want to do that, that's up to you, but we're not saying it's safe or something like that, right? So the last thing I want to talk about before we go to crypto, so the topic that everybody wants to talk about, but very little people understand it, myself included, we got cross-border payments. And in terms of cross-border payments, this is yet another remark to what we started the conversation, is getting paid. And fintechs answer the question of how you are getting paid. And this plays a very important role, because a large part of the world even if they are still working on remote right now, remittances are a very major part of cash flows. And whilst you usually would be, let's say, I don't know, migrating from the Middle East to Central Europe, and you would be sending remittances back via Western Union, which was kind of costly. You would have to physically be there, you would have to travel with the money, so not too safe, not too convenient. And now we see here, I'm mentioning Uruguayan payment startup, it's called dLocal. It quadrupled its valuation, $5 billion. So, any comment on that?
Never heard about the name. Which country is it operating?
It's from Uruguay.
Okay.
5 years old.
5 years old. So I guess we've seen a lot of great fintech startups in the remittance space for the last couple of years. We have obviously for TransferWise rebranded recently to Wise. Very wise move, by the way. We had World Remit, like the great UK startup, actually helping people to move money from like UK to Africa and UK to US. So it's like following the migrants path, migrant workers to back to their families. But I think we still maybe it's true that we still need some local, have some local understanding of the market to be really successful. So India is a different story. Maybe Latin America and South America is also the different story. So maybe it does take a little, much more effort around understanding the local environment and players, whatever they may be, than only, to have Wise being global brand for each market. So the space it's for sure huge if the startup from Uruguay can raise that kind of money for that high evaluation, at that high evaluation.
When I was listening, this conclusion came to me that it's the local part is very important, because on every every stick has two ends to it. And here, even though dLocal is probably focused on the person who is happy to send the money through them, on the other end we have someone who's receiving it. And typically, I would imagine with remittances, you would be looking at developed countries, developing countries, already huge markets, emerging markets. So it's very strategic for a company like dLocal to be in two markets at the same time, because usually remittances are sent to, like I said, emerging markets. So when you have presence in an emerging market, you're sort of strategically positioning yourself that by the time that market emerges and grows up, you're already going to be their favorite payment provider in one way or another, because they're just so used to you. So major kudos, dLocal. Looking forward to your future successes. And now we got 5 minutes left for crypto.
5 minutes for crypto. Okay. Oh my gosh.
Yeah. I mean, there's not enough time in the world for crypto, right? But just what I can say is we've spoken with Julian Grigo, managing director of digital assets at Solaris Bank, on Clubhouse just recently. And got some people on the criticizing side, some people on the in favor side. And essentially what emerged is, first of all, it's not supposed to be a currency like the dollar or the euro for everyday purchases. It's budding in its capacity, not perhaps as a speculative currency, but as a tool, which we've seen with the explosion in NFTs. And that many people are excited about the potential, because currently, like I said, it doesn't hold that much value. You don't use it for purchases. You use it for making money because the stock goes up, right?
It seems so right now, but what I can say for sure, well, I'm not a crypto investor or a crypto geek myself. But what I say is that the crypto is no longer for geeks. So we've seen the news like the crypto lobbying group is coming. So similar to what Facebook, Amazon, Google are doing in Washington. So there will be a new lobbying group actually to help shape the future of crypto regulation, coming from Coinbase, Fidelity Investments, and Square. So three major players, not only known from their crypto activities. They are coming. And then we have the biggest brands investing in the crypto. So only recently, I would say that was the end of March, I believe, Visa announced a pilot program to settle transactions over Ethereum. The PayPal launched the crypto checkout service, and it will be available at all of its almost 30 million merchants. So not only for some kind of selected group of merchants, but for all. So this is going to be like the first time you could use your cryptocurrencies the same way as a credit card, actually, or debit card, obviously inside your PayPal wallet. So what we see is like the massive change, massive shift. Something is changing for sure. We don't understand it. We cannot fully grasp it yet, maybe. But we see the long-awaited IPO from Coinbase coming in the April. We see like enormous, like the blockchain funding bonanza. We see a lot of known investors coming into this space, like Mark Cuban. He backed the crypto data startup Espresso. We see Andreessen Horowitz setting its own crypto investment fund. So, yep.
So, yep, I agree. I mean, I've seen in one of the articles that we've been reading before this that some companies that possess large numbers of assets under management are devoting cautious but bold 1% of their assets towards cryptocurrency, which leads me to believe that it's like, first they laugh at you, then they hate you, then they fight you, then they join you. So we are sort of at the fight you, they join you phase, but it's like we don't really believe it, but everything leads us to believe that this has the potential to grow. So we better not miss that train. 1% safe bet.
Absolutely. It's like everyone is afraid to say, right now we are in the moment, like it's not that easy to say, okay, this is like the fairy tale, because if you see Visa and PayPal investing so much money, so much effort into that space, so you're starting to scratching your head and thinking like something is going on for sure. I don't know. I don't understand it. I cannot grasp it. I'm not sure about the potential consequences, but something is coming. I am just unsure about the direction. Is it gonna hit me, or will I become a billionaire maybe?
You got my phone number? Keep it in your phone.
Yeah, we should do some commercial break right now, I think, because we are just discussing the things that we are not yet sure about, but maybe some commercial break, Filip.
Yeah, because there's one thing I'm sure about, and it's the 13th of April. And on the 13th of April, just like we mentioned, this is the reason why we decided to be for 30 minutes on your LinkedIn and other timelines on your social feeds. We wanted to make sure that you hear about Netguru, Fintech, and the Disruption Forum Fintech that we're making. So,
Yeah.
Kasia,
That was not prearranged, so it wasn't ready for most of the Filip's questions.
Absolutely. So, Kasia was kind enough to shoot over the link to sign up for Disruption Forum Fintech. There is still room for you to join. And with guest speakers from companies like Societe Generale or the companies of cards that we mentioned, Playo, Adyen, Tomasz, I surely forgot because there's so many, but maybe any companies that you recall?
Like City Ventures, maybe someone is familiar with the name City Ventures. Also Alloy from New York, a cool fintech startup. We'll have a speaker from the Plaid, but not right now in the Plaid, but we'll have the Charlie Ma he was actually the first business person at Plaid, so like a few years back. So a lot of different angles, a lot of different experiences, multinationalities, also multi-country. Global event will be hosted from Poland, but we'll have the speakers coming from around the globe. Solaris Bank, also our beloved client, will be there with like the two persons joining us, not only Julian Grigor mentioned, but also Nicholas Knecht, manager of the head of the lending unit at Solaris Bank, talking about buy now pay later. Yeah.
And the biggest irony of it all, or the best thing for you, it's about fintech, it's about money, but it's free. You're not parting ways with any money. So we're all under lockdown. What else are you doing other than joining us on the 13th? Like I said, one last time, link to sign up in the comments section, and hopefully see you on the 13th. And thanks for watching us today. Thanks, Tomasz.
Thanks for having me. It was a pleasure to talk to you for the first time.
Hoping many more. See ya.